Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Gina Martin-Adams in for Caroline Hyde, counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast, Carol Massar and Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. And Carol, another wild day here, another down day here.
Yeah, absolutely. Down across the board. In fact, the Dow just bouncing back between green and red as we have a few minutes left. One of the groups, though, that's a standout. We mentioned it earlier in our cross-platform coverage, financials. I've been looking at the KBW Bank Index, really benefiting from those higher rates. That group, Tim, up about 1.7%.
Okay, well, the S&P 500 down about 0.7%, 0.8% now, but earlier in the day, falling to levels last seen in May of 2021, just to give you an idea of how far we've come from those highs earlier this year.
What I don't like to see is the small cap index sort of giving it up today. And small caps down about 2%, sort of really contrasts with the trend that had been developing over the course of the last week or so, where small caps were stabilizing relative to large caps, indicating that maybe some risk tolerance might emerge. We don't like to see small caps falling more.
And you wonder why that is, because you're certainly getting that reflationary, inflationary trade today. I was sort of distracted as I was looking at sort of the superlatives, Romaine. We're looking at the biggest one-day increase in 10-year yields since March of 2020. On a weekly note, of course, we just had a big volatile week last week, but on some of the daily moves, at least on the 10-year, it's pretty big.
And when you look at the levels, of course, we're back to sort of mid-2019 levels. But more importantly, we're back to levels, above levels of where we were prior to the war in Ukraine. So this is a market that was already pricing in an aggressive Fed prior to that. That trade unwound, but now it's come back with a vengeance here. And of course, you saw a little bit earlier Fed swaps indicating 25 basis point rate hikes being priced into this market.
7.082.
That's right. Well, happy Pi Day to all those who celebrate here. March 14th, 2022. You're looking at a Dow Jones Industrial Average that, after a pretty wild swing, looks like it's going to finish the day unchanged, up less than 1 point. The S&P 500 is going to finish the day down for a third straight day, down 0.7% or 31 points. The NASDAQ Composite down about 263 points or 2%. And as Gina Martin-Adams was just pointing out here, interesting moves today in the Russell 2000. Some of those small cap cyclical names really turning over. The Russell, Carol, down about 1.9% on the day.
Yeah, smart focus on the small caps. I'm just going to go back to the large caps, the S&P 500, 219 names gaining in the session, a little bit more to the downside, 284 to be exact, Taylor.
And it's 3.14159, and then I forget the rest of the numbers in that. So Romaine will have
Is that like having 2.1 kids? Like, what is that 0.1 kid?
You'll have to fact check me on what happens after the 14159.
You got to be precise.
Yeah, but come on.
Precise. We'll get precise for you here for our radio audience as we do on some of the individual sector levels. Again, we go sort of down 2 levels to get better size and scope on the S&P 500. And Romaine talked a lot about, well, maybe sort of the lack of breadth that we have today. And you sort of see that as you have green and then you do have red for some of the losers. Interestingly, something we've been talking all about today with the big reflation, re-lift up in yields. Banks and some of the dividend financials are some of the best performers. You're up anywhere from 1% to 2% on the day. We go down to the losers, Romaine, and it's sort of that classic risk off. It's energy, semiconductors, auto components. Those are off anywhere from 3 to 3.5%.
All right, and just a headline, just getting confirmation now. The NASDAQ 100 down 21% from its all-time high, the first time that it's closed in bear market territory going back to March of 2020. Of course, the pandemic ructions, Carol, to be precise, it's 21.2794%.
Yep. Because we have to be precise, because it is
it's
math.
Pi Day.
It's important. It's Pi Day. Let me take a look at some of the gainers here. We had 2 names in the vaccine universe certainly winning, and that's because of the uptick that we've seen in cases over in China, the lockdown of major communities there. We've also seen an uptick in cases in Germany. And we had the story about sewage water, watching it here in the United States, maybe an indicator of possible uptick cases here in the U.S. Anyway, so Moderna atop that list, 8.6% higher. It was up as much as 20% earlier in the session. BioNTech, the German biotech company, it was up about 18% at its highs today, finishing, though, still with a 12% gain. And I wanted to mention EPAM Systems is constantly, it feels like, in the news. A lot of volatility, right?
This looks dangerous. Are people piling back into this now?
I don't get it. It's still down about 70%. so far this year. It's up another 10% today. I think the short interest has come down, though, Romaine, on this one. It's just about 1%. But we know the story. A lot of workers in Ukraine. The CEO is under criticism, but trying to figure out what the future is for this company.
Well, no shortage of decliners today. I want to start with a couple superlatives. The worst performer in terms of points, dragging down the S&P 500 today. Apple sinking 2.7%, closing at its lowest level since November 15th. Shares dropping below their 200-day moving average. This after Foxconn halted operations at its Shenzhen sites.
That's a big deal.
It's a huge deal.
I mean,
but Apple has a couple things going for it here. One is the decline in hardware sales in the first quarter of the year, right? There's kind of this lull here post-holiday.
Yeah.
And two is that, when it comes to COVID precautions, this is something that Apple and Foxconn have been preparing for 2 years. So they are able to buffer it a little when it comes to hardware in other places, in production in other places. But Romaine, what does it say about other sites too that could go through this?
Yeah, and before you move on, just real quickly, because I want to pose this question to Gina here, because when we talk about Apple has sort of been that ballast. Every time we've had major equity sell-offs, it always seemed Apple managed to survive it better than others. The idea that it offers some degree of value, at least relative to the others. Why aren't we seeing that this time?
Well, remember, we were guided by Apple to expect better supply chain or less supply chain friction over the course of the last few months. They were one of the bright spots in the landscape, suggesting that the supply chain was going to ease. So anything that would suggest something to the contrary is naturally going to affect them fairly significantly, and this was a surprise. The market wasn't expecting this. We were expecting quite the contrary for Apple specifically.
And it's a reminder that the pandemic is still here.
It is. Another reminder is what's happening to shares of companies that have exposure to Macau. Las Vegas Sands being chief among them. Shares finishing the day down 11.9%. 68.4% of revenue in 2021 for Las Vegas Sands came from Macau, but those U.S.-listed casino operators who do business in Macau under pressure today after those additional COVID-19 restrictions in China stand to curb visitation. And then Tencent finishing the day down just about 9% after the Wall Street Journal reported that it faces a record fine for violating Chinese anti-money laundering regulations. This does also come after JP Morgan Chase, or following that, I should say, JP Morgan Chase analysts on Monday downgraded 28 China stocks listed in the U.S. and Hong Kong. Among those was Tencent.
Yeah, certainly. I know for our radio audience, typically we do our GRR function. Caroline Hyde does it better than anyone else, so we skip it, that GMM function, and go to yields. And you guys, this is a big day. This was a big movement that we saw in yields. I mentioned this earlier on the 10-year yield, the biggest one-day increase in yield higher that we've seen since March of 2020. The 2-year yield, though, Carol, and this is interesting, it's only the fourth biggest day this year in terms of yield higher. We've had way bigger moves higher as you think about the volatility approaching the Federal Reserve, how you're thinking about the pull forward and some of the inflationary expectations that are confronting this Federal Reserve.
And I guess what I wonder, and let's talk about it, right? The big thing this week is the FOMC meeting, certainly here in the United States, and what the Fed ultimately says. Are they more hawkish? Are they more dovish? Are they very careful in how they lay things out? And I do wonder whether or not, in terms of the yields, that we look at the yield curve, is this kind of it? Is this the levels that the market settles it within, Romaine?
Well, you do wonder. I mean, we had those headlines a little bit earlier today about Fed swaps pricing in a full 7 hikes, 25 basis points hikes for 2022. But I would actually turn your question over to Gina right now, particularly when it comes to the inversion and what we should expect.
Yeah, I think that it's a key question. Obviously, the 10s, 2s are dangerously close. The market is looking well ahead into 2023 and saying we are going to eventually price for recession coming. But the Fed does follow that 3-month 10-year Treasury yield for a reason. It's the most reliable indicator of recession. It tends to give you a much more timely indication of recession. And so what the Fed does here is really critical. What I'm watching this week also is the PPI and retail sales numbers tomorrow. I think they could be pretty consequential for getting a beat on how the consumer is contending with inflation and also just how much margin pressure is yet to come.
And you were saying, Gina, earlier, some of the big run-ups in PPI relative to CPI. PPI, though, does it look like it has peaked? Are we starting to see a deceleration or maybe a slower acceleration on at least some of the month-over-month figures? And does that have any correlation to the CPI data in months to come?
It should, if it peaks. I think that's a big if right now because we've seen oil prices surge. Ag prices across the spectrum have surged. Metal prices obviously off the charts. So will we really see that peak is a big question. The market is expecting 9%. Could we have more than 9%?
Wow.
Absolutely.
Yeah, so that brings us, of course, to Wednesday, and when we do hear from Fed Chair Jay Powell. And I wonder what his his messaging around inflation is going to be. It certainly moved away from the idea that it's temporary, but again, it was based before on demand shocks, not on supply shocks like we're seeing right now.
Yes. So a lot for the Fed. I'm curious to see if the markets calm down ahead of the Fed meeting tomorrow and just kind of mark some time, but we shall certainly see. All right, guys, that's got to do it. That's a wrap for our cross-platform coverage on radio, TV, and YouTube. It is called Beyond the Bell, and we will see you again, same time, same place tomorrow.